Welcome to today's Explainer, where we're diving straight into a massive, frankly mind-blowing disconnect in our society. The world is absolutely filled with people who just look wealthy, but behind the scenes, they possess literally zero actual net worth. We're going to decode the secrets of the invisible rich, the folks quietly building private empires while everyone else is distracted trying to maintain a public image. It all kicks off with a pretty uncomfortable question, honestly. If your salary makes you rich, why are you still broke? Seriously, think about it. We all know high-earning professionals pulling in huge checks every month, but behind closed doors, they're sweating, completely stuck living paycheck to paycheck. A high salary keeps you comfortable, sure, but a high salary combined with high expenses? Well, that's a trap.
You see, society basically trains us to look successful, which creates this army of status spenders. The second they get a raise, what do? They expand their liabilities. They upgrade to a bigger house, a flashier car. They are merely high-consumption liabilities. But the invisible rich, they play a totally different game. They prioritize ownership over appearance, quietly stacking up silent cash-flowing assets.
There is a phrase that hits the nail right on the head here. Looking rich keeps you broke. It's so true, right? Spending your hard-earned cash just to get some social validation is literally draining your actual net worth. When you buy things purely to prove you have money, you are, by definition, losing the exact money you're trying to show off. It's a vicious cycle that guarantees financial ruin.
Let's look at luxury cars as a perfect example of this. You drop a huge pile of cash on a brand new ride, that's a massive expense up front. But the crazy part? The absolute second your tires hit the public street, you get hit with an instant, painful 20% depreciation. It just vanishes. And the real tragedy isn't even the depreciation, it's the lost investment potential. That depreciating block of steel is literally blocking your money from compounding and growing over time.
And that leads us straight to a silent wealth killer you've probably heard of, lifestyle creep. This is that dangerous cycle where earning more simply triggers spending more. You get a 20% raise and boom, you immediately upgrade your lifestyle by 20% to match. Pair those depreciating assets we just talked about with lifestyle creep, and you've got a perfect recipe for a flat, zero net worth. You're running on a treadmill, sprinting as fast as you can, just to stay in the exact same place.
Section 1. Meet the invisible rich. Prioritizing ownership over appearance.
So we really need to redefine our terms here. Real wealth is the presence of options, not the display of objects. It's unspent cash. It's those investments paying you while you're fast asleep. True wealth is having the ultimate freedom and flexibility to walk away from a toxic job, take a gap year, or handle a massive emergency without a shred of panic. It's completely invisible. The real millionaires, the ones who actually have that freedom, they operate completely under the radar. I'm talking about driving simple, modest vehicles and living in average, unassuming homes. They flat out refuse to play the social comparison game. Instead of showing off, they're quietly accumulating cash-flowing assets. They're fiercely protecting their capital instead of putting it on display. You've got to ask yourself a tough question. Are you buying status or are you buying freedom? Because chasing your neighbor's lifestyle just to impress a crowd, that brings financial ruin. It literally costs you your future freedom. On the flip side, quietly letting your wealth grow through boring, consistent investing, that's what builds ultimate life options. This requires a massive, complete mindset shift. Stop trying to impress a crowd that doesn't care about your future. Honestly, the people you're trying to impress with a designer watch or a fancy label, they are not going to be there to pay your bills when you retire. We have to stop sacrificing our future just for their temporary approval. Section 2. Consumers versus owners, the mechanics of true wealth. The mechanics behind this are actually pretty simple. A consumer constantly looks at their bank accounts and asks, okay, what can I spend this on? They're always trading cash for depreciating status. But an owner? An owner looks at that exact same bank account and asks, what can I build or acquire? They trade cash for compounding assets. It's a fundamental, night and day difference in how they view a single dollar. This mindset totally flips how you view debt, too. We're often taught that all debt is evil, but there's a huge divide. Bad debt simply drains your wallet to buy things like luxury gadgets or cars. It never generates any income. Good debt, however, actually puts money into your pocket. The wealthy use good debt as a powerful tool to safely leverage things like income-producing real estate and profitable businesses. So instead of trading your finite time for money, the invisible rich focus on acquiring 5 specific pillars. We're talking stock market equity, rental real estate, scalable business ownership, intellectual property, and cash flow paper assets.
The whole point is to build machines that literally make money for you while you sleep. Because at the end of the day, time is your ultimate bottleneck. You only get 24 hours. You have to move from effort to leverage, move from active to passive. Hard work alone just cannot scale infinitely, so you must decouple your income from your actual physical labor if you want to break free.
Section 3. Build your private empire. Actionable systems to escape the salary trap. All right, let's talk actionable systems. The first one is the 48-hour rule. Think about that random item sitting in your online shopping cart right this second. It feels super urgent, right? But most consumer spending is purely emotional. Try forcing yourself to wait exactly 2 days for any non-essential purchase. Once that emotional high fades, logic returns, and I guarantee you'll save yourself thousands. Next up, you've got to realize you can't improve what you don't measure. You need to run a 30-day wealth audit. It's simple. List everything you own, write down every single debt, and calculate your actual hard net worth. And hey, don't judge the starting number. The goal is just to find those hidden leaks draining your bank account, set a target, and start tracking your actual path to freedom. And here is the golden rule of wealth building. Give every single dollar a job. Undirected money just disappears into thin air. If cash is just sitting in your checking account with no purpose, you are absolutely going to spend it. Every single dollar must immediately be assigned a job, whether that's to invest, save, or pay a bill. The best way to enforce that? Automate your money. Willpower fails us all the time, but systems run forever. Set it up so the moment you get paid, a set percentage automatically goes to savings, then to your investments, then to cover automated bills. Your wealth just builds silently in the background. And the best part? You get to enjoy whatever is left over completely guilt-free. Remember this. Boring consistency beats spectacular intensity. Trying to get rich quick or constantly trying to time the market, it's stressful and highly unstable. The real path to wealth is the boring, automated consistency of slow compounding. Tucking a little bit away every single week is what actually builds an unshakable financial foundation over the decades. Ultimately, every financial decision you make is a trade-off. It's a constant battle between short-term comfort today, the instant pleasure and expensive distractions, versus long-term wealth, which requires delayed gratification to secure your future safety. The truly wealthy, they always choose tomorrow's freedom over today's comfort. Let this become your brand new standard. Real wealth is the presence of options, not the display of objects. We have to stop working so hard just to look successful. Instead, focus entirely on building a private empire that pays for your life rather than a public image that just drains your bank account. As we wrap up this explainer, I really want you to take a hard look at your own spending habits and ask yourself this one crucial final question. Are you building a public image or a private empire? Choose the empire. Thanks so much for joining me today, and I highly encourage you, go start that wealth audit right now.